The probabilities from an Elliott wave point of view are higher to look for a retracement to the downside after locally we preferably still take out this high. In this video I will explain why that is by covering several Elliott wave scenarios on the 8-hour and the 15-minute time frame. By the end of this video you should have a very clear overview of what we are looking for, why the probabilities are the way they are, and how probabilities may change. If we then look at the first scenario, a diagonal, a 5-wave structure, 1, 2, 3, 4, 5, and after 5 you look for a bounce to the upside. Now in this case we then want to see wave 4 finish and a 3-wave move down in 5, either preferably a simple or a double zigzag. A simple zigzag would be a 5, 3, 5 ABC, a double one would be a W, X, and then a wave Y. Now mind you that a WXY will likely put a lot of Elliott wave analysts on a wrong path, because there is a way to count this structure to the upside as a diagonal, which can be bullish, and then after a zigzag down, people might look for a wave 2 or a wave B, and of course expect an impulsive move to the upside. It will be one of the scenarios you will see here on the channel as well. But it is important to realize that if this move up is not an impulsive structure, but corrective, we're looking for price to move down, take out the low, and then of course wave 5 has to take out the low of your wave 3 as well. So a 3-wave corrective move down here does not mean that we are going to take out this high. It is this structure up that will decide the probabilities for continuation up or taking out the low. There are two invalidations on my chart. The upper downwards sloping invalidation comes from a channel taken from the low of 1 to the low of 3 to the high of your wave 2. And in a contracting diagonal, 4 should not touch the upper trend line. And then the 1-to-1 trend-based subextension is taken from the end of 2, end of 3 to the current high of wave 4. However, if we look for another high locally and price makes another high, this invalidation is going to move towards the upside, and preferably the invalidation stays below the blue box, support 67.4 to 68.9k. If price, however, takes out the couple of highs here at 88.8k, you can see that the invalidation sits inside the support box, which is going to be important. Now then we go to the second scenario, which is a bigger zigzag. Wave A, wave B, wave C. It would be nice if B goes as high as possible without taking out the all-time high from a psychology point of view. And that basically is true for every scenario, pretty much every scenario, because the higher you go, the more FOMO, the more people start talking again about all-time highs and 500k per Bitcoin and la, right? But then you grab that liquidity, dump it back towards the downside, take out the low. People start talking about bear market this and bear market that and all the terminology. And then eventually you drag it back up, take out the all-time high. So very interesting from a psychology point of view. Now in this scenario, we would then be looking for a double zigzag in B, a WXY, mainly from a time perspective. So we have a finish diagonal in A, 1, 2, 3, 4, 5, right? Finished. Then you have a diagonal locally, which we'll cover in a second. Move down has to be corrective. And then you start a new impulsive structure up, right? Big difference. So impulsive structure to the upside in a wave W to create an ABC zigzag in W. X should not touch the 0.7 taken from the low to the high of your W. I put W on top of the 93k resistance, the blue box here. Right? And then you still look for another wave Y towards the upside, which also should be an impulsive structure. Now in this particular scenario, we like to finish wave B after this vertical line, which is a 382 fib time taken from the start to the end of your wave A. Based on the time of this structure and the potential retracement, it at the moment doesn't really feel very likely that a second leg up for an A, B, and then a wave C is going to end after the 382 sitting on the 6th of May, which therefore then is the reason that I got a WXY on my chart. Now the moment a second leg up would finish after the 6th of May, we can convert this to a simple ABC as well to finish B and then look for price to move down. Just a little bit too early to say, but based on what I see now and how slow price is moving here towards the upside, we expect to move down and another leg up. I know it feels, a WXY feels on the cards there. Now this is a more, I suppose, bullish scenario without looking for a retracement, right? So we have the same diagonal, multi 1-2, get a 3, couple of 4-5s. That's your A, look for B, then get a wave C towards the upside. And after wave B, we look for price to move back down, take out the low. Now the probabilities for this scenario are mainly affected by the structure to the upside here. In a multi 1-2, 1-2, 1-2, another 1-2 of course, the first wave 2 touched the 886, which for an impulsive structure is very, very rare. And I'm talking about a 5-wave impulsive structure, 1, 2, 3, 4, 5. If it is a diagonal, your wave 2 is more commonly deep, right? It's still not very common, but it is more commonly deep, and the 886 can definitely be touched. It's something we see more often in a diagonal than an impulsive structure, which impacts the probabilities for this particular scenario. Also, counting this as a multi 1-2, as you will see once we go to the 15-minute time frame, is not very pretty. There is no invalidations, it's just not a very pretty structure, which I'll cover later. Then we have a bigger WXY, ABC, W, ABC, X, ABC, Y. This is a double zigzag with a flat in wave X. A flat in wave X is one of the most common structures in a double zigzag wave X. If you go to the data of Rich Swennell, some of the data is really bad, some of the data looks pretty good with what we see in real life. This is one of the ones that we do tend to see in real life, that wave X, based on the data, appears to be a flat in 57% of the WXYs in a downtrend. So therefore, it's interesting to at least consider a flat in a WXY double zigzag. Of course, we don't want to touch the 07 at 98.9K, because if X does, the probabilities for a WXY double zigzag decrease. Now, in this case, you can follow both the dotted line or the bold line, I suppose, the full line. But as you will have heard in the first few scenarios, this would be better, because otherwise this has to be a multi 1-2. And as just explained, it's just not as pretty with the 886. So looking for a retracement and a move up would be better. Hence the reason this one is full and this is a dotted line structure. You can also see I added a channel here. And the reason I added a channel has to do with a scenario that is coming up after this one, which is the WXY that was covered extensively by probably everyone left, right, and center on the internet, which is a scenario we've never really been a fan of. But you can see here that the channel works very, very nicely. It's not too steep. It's a nice corrective channel, right, against the trend. You have your W, right? You look for your X and then your wave Y. Channel taken from the high here to the high of X to the low of your wave W. Perfect place for wave Y to finish as well then at the lower 60s, right? Around 60 and lower 60s, high 50s in that case. And your wave B has the opportunity to retest the channel as well before then a move towards the downside. It just looks like a solid structure, preferably C in a flat ABC moves above wave A. Yes, has to be said that your wave B is long compared to your A, because that is your wave A and a WXY in your wave B. Sometimes that's the way it is, and we just got to roll with it, no? Now this is where you have the WXY double zigzag, same channel. Just look at the structure and compare the channel and the structure. Just take a few seconds to look at it. And compare this with this. I mean, for me, it is a very, very big difference, right? You have your same W, X is already finished, and then you look for a wave Y to the downside with a diagonal in an A. 1, 2, 3, 4, 5. I've covered this scenario a lot, and the reasons why it's not really one of the favorites here on the channel already. When people started talking about triangles here, we have a diagonal to the downside. You need a wave 2 to not take out these highs. That would be an invalidation. You still need a 3, still need a 4, still need a 5. Before a diagonal here to the downside gets the highest probabilities, we preferably at least finish a 4 and take the low again of your 3, right? So it will take a while before this even gets close to receiving the highest probabilities. And then besides finishing your A, you need a wave B. But B is going to be very likely move above the upper trend line of this channel, which just is not as pretty in a WXY double zigzag, and preferably your wave Y would end on the lower trend line or close to the lower trend line of the channel, which is very unlikely in this particular scenario. Then we have the most bullish case. WXY finished all-time highs. Lower probabilities because wave Y finished before the 382 fib time, taken from the start to the end of W to the end of wave X. And in this case, you just want bullish impulsive structure, all-time highs, and the moon is coming. Then we go to the 15-minute time frame. So we covered the 8-hour time frame, and we will summarize everything at the end, okay? Now, this is your diagonal. So in some of the 8-hour time frame scenarios, a diagonal is required to get a move to the downside, and then potentially, of course, a bounce. So here we have a wave 1, 2, 3, 4, and then we have our wave 5. You can see all the subwave structures as well. Now, this B has been noted, as you can see, right? This wave B is either very short in time because you have a 5-wave structure in A, this is your B, and a 5-wave structure in C. So either it's very short in time, but if we put this B at any other low in this move up, it is incredibly shallow. This wave B at no other moment in this move up is touching the 0.382 Fibonacci, which is taken from this low to whichever high you then pick, right? Because your wave B, for example, here, you would take a fib from this low to this high. It only touches the 236, which is a very shallow target for a wave B, and it's actually very rare for Bs to only retrace to a 236, preferably it at least retraces to a 382, which isn't the case in this scenario if we move this B to another pivot. But here it is incredibly short in time, which also, of course, is not very pretty, right? So that makes you wonder. Now then you have the invalidation for 5, preferably wave 5 finishes at this current high here. Wave 5 is already over 3 times longer than wave 3. Having a wave B down and another C up to finish 5 will be lower probabilities. Let me explain what I mean there by zooming out. The vertical lines are fib times. This white fib time is taken from the start to the end of 1 to the end of 2, comparing 1 with 3. Wave 3 is 3 times longer than wave 1 in time. Wave 5 is about 3 times longer than wave 3 in time, meaning about like 6 times longer than your wave 1 in time, which is a very big difference. And if we want to move this wave A to this high, this B to a low here, and C to another higher high, right? Just to avoid this wave B being either very shallow or very short in time, this 5 is going to be even longer. A, B, C. You have to watch out for the invalidation at 87.4K as well. Plus, it's going to be not only be 3 times longer than wave 3, it's going to be 5, 6, 7 times longer than your wave 3, which starts to, I mean, it's already a big difference, but the difference only becomes bigger, 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 and bigger, which is not what we like to see. So preferably, that would be the end of your wave 5. Now, after a diagonal, you preferably get a deep retracement to the downside, for example, a zigzag structure. You don't really like to see flat structures after a diagonal or a WX where X takes out the high and then a wave Y. Preferably you move to the downside, zigzag structures, double zigzag structures, etc., right? Which is something to note as well as locally here, probabilities, as I'll explain later, are at the moment still higher to take out this high, right? So it's very, very interesting. Now then we have the WXY, which arguably is one actually of the more interesting scenarios. And a WXY, by the way, would be a subdegree count of that big diagonal. For example, there you go, your wave 4. So just something to note as well. Now in the WXY, this I analyzed everything during the weekend. I updated silver on Saturday and Sunday. So some of the stuff like these arrows were done on Saturday, but I haven't updated the dotted line from when I started analyzing. But basically here you have your W, you have your X, and then you have your wave Y. If you end wave Y at this particular high, you get the same problem with your wave B. Your wave B is likely either very shallow or it's very short. However, in this scenario, you can move your A here, move B to the right, right? The yellow A and the yellow B and the yellow C is your change. You can move B down and you can still get another C up to get a bigger WXY double zigzag structure. Common target for your wave Y is on the chart, 87.5 to 89.7K. Wave B preferably retraces to at least the 0.382 taken from the low of your wave X to the high then of your wave A, which has been touched, which is nice. Besides the 382, I would personally dig it if price is going to touch the daily naked point of control at 82.675. Observe the reaction and look for a potential move then there towards the upside, right? Which is also what my dotted line here put on the chart. So look for a three-wave structure basically, and then eventually move up to finish your C. Preferably C is very volatile on a high amount of volume, faking people out that there's a potential wave 3 coming, but instead it halts, it stops, it starts grinding to the downside with bearish CVDs, and we look for price to move back towards the downside. From a time perspective, with the vertical lines, this scenario can work perfectly well, and also if you move things around a little bit, right, this scenario also moves or suits very well to the current price action. Then we have the multi-1-2. Now I explained on the 8-hour why the probabilities aren't great. So you have your wave 2 that touched the 886 fib taken from the low to the high of wave 1. That is not ideal. You have your second one, second 2. Preferably this is your third one, and then look for a third 2. Why? If we count this as a 1-2 and another 1-2 or 1-2, 1-2, then this wave 2, there you go again, either very shallow or very short. Wave 2 touching a 236 happens incredibly rarely, right? It's very, very rare that happens. So preferably the whole thing is a wave 1. You look for a wave 2 and then for price to move towards the upside. 382 minimum target for a wave 2, which is touch. However, also here, if we look again at time, your second wave 1 is 3 times longer than your first wave 1. Your third wave 1, 3 times longer than your second wave 1. Now, mind you that in a multi-1-2, you work with Elliott wave degrees, right? So you have a 1-2, 1-2, 1-2, and then get your 3. This is not like a traditional pattern in Elliott waves. I made a whole video about a multi-1-2. A multi-1-2 has to do with Elliott wave degrees. Your first 1-2 is your highest degree Elliott wave count, right? So preferably the first 1-2 are the biggest structures. And then you get a second 1-2, which is a lower degree, right? And then you get the third 1-2, which is again an even lower degree. And preferably each 1-2 is a little bit shorter in time and price, or at least relatively equal to the previous 1-2, but preferably there are not very big difference, right? That a second wave 1 is a little bit bigger in price or in time, that can happen, right? But the fact that this one, right, is 6 times longer than your highest degree wave 1, right, is not great for a multi-1-2, which therefore lowers the probabilities for that scenario. And then we go to the local price action. So the move down over here counts nicely as a 3-wave structure, and preferably as a 3-wave structure as well, with then followed a potential WXY, which is a flat. So you have a zigzag, you have your X, and then you look for a wave Y to the downside to create a sideways range, which is perfectly fine in a wave B, right, of a double zigzag, where this is your A, B, C to finish your Y, remember? Now, because wave X touched the 0.7 Fibonacci taken from the start to the end of W, a double zigzag W, X, and then Y lowers in probabilities. It's not an invalidation, it just lowers it significantly in probabilities. And in the end, that is what we trade, and that is what we, of course, keep an eye on. It is the probabilities. Now, that means that for a wave Y, preferably, you either look for a flat or a triangle. But if you have to choose between a flattened Y and a triangle after a move after X has just started, a flat will always have the highest probabilities. A triangle will only get higher probabilities if you eventually finish your wave D at least. So it will take a little time. So therefore, looking for a flat is more interesting. But the conclusion, I suppose, of whatever this mess is going to be, as I am not too interested in all of this. I'm interested in that. The daily naked point of control at 82,675 is not yet touched. It has not been touched here. It hasn't been touched here. It's still not touched. I'm looking for that to touch and then see what the reaction is. And if I see what I want to see over here, it always takes a bit of time for me to enter trades, right? I need to wait for some structure, Elliott waves coming in, CVD and whatnot, right? I need a bit of patience, need to wait. But if I see what I want to see, then this can be very, very interesting for me to look for price to take out this high or take out this high if B doesn't already take this one out. And then eventually look for a potential finish C of a bigger Y, right? Something I keep an eye on. Your bullish alternative here is a finished three-wave structure, impulsive continuation. Move up is an A or 1. Lower in probabilities because this has to be your corrective structure and your second leg finished before the 382 fib time compared to your first leg, which is very uncommon. Now then we got to the news. Wednesday and Thursday, we have some high impact news. Make sure you trade safe, can increase the volatility. And then we get to the polylines and the probabilities. So this is the time where I can summarize everything and explain why it is the way it is. So on the 8-hour time frame, the probabilities are higher. A retracement comes, and we'll have to see if it's corrective or more impulsive. But locally, probabilities are higher, or at least here I say it would be nice to hit that daily naked point of control. Observe the reaction, signs of strength. Move up to take the highs, something we've been keeping an eye on now. Observe the reaction after we take the highs because there's always the potential of impulsive continuation. So there's no way that I have limit shorts here or price takes out these highs, boom, short, right? I'll wait for the reaction, observe my tools. I know my plan, I know what I look for, and I execute if I see what I want to see. And that is something that you should do as well. Because I don't want to be on the wrong side if this turns into a wave 3 and lose 1% in a couple of seconds. And then after I see, observe the reaction, blah, 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 and then eventually we like to look for a retracement. That is the highest probabilities from an Elliott wave point of view. On the 8-hour, if you look at the polylines, which is all the scenarios together, and we zoom into more local price action, then you can see that most of the lines are looking for a retracement. Yeah, of course, I can move the highs a little bit higher and the blue line, it doesn't matter. Down, 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 down. Dotted line up, but the dotted line has to do with the multi-1-2 and the lower time frames, which as explained, doesn't look as good. It's not invalidated. But if we think about Elliott wave knowledge and all the theory that we can use with time, price, fibs, the structure, it just doesn't look as neat as counting this as either a diagonal, right? But then preferably you don't take out that high actually before a deeper retracement, or a WXY double zigzag, after which you look for a retracement. So then based on the retracement, right, we will know what the probabilities are going to be after, right? Is this corrective or impulsive? That's step one. And then is this move up corrective or impulsive? This is the one that then matters the most for taking out lows or taking out the highs. So this is what's explained in summary in the probabilities. Now, notable resistances and supports are basically the boxes as well, but let's put 88.8K in there with the highs. Then you have 93K, then you have 96K, then you have 102K and 105K. And to the downside, 77 is here. Then you have 68, then you have 62, and then eventually you have 57K. So again, a long video, but I just like to explain things in a lot of detail, right? This is how Elliott waves work. You consider the different scenarios, you check the rules, the guidelines, how everything fits together, and you get probabilities and a conclusion. And then from a trading point of view, right, with Elliott waves, we require generally a bit more patience, wait to observe the reaction, and then we take it from there. So hopefully you enjoyed this video. Hopefully it was helpful and valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.